Okay, hello everybody. The starting button is creating this window. I don't know what that window was. Anyway, so I am coming with very good news. Very good news for my diary. So this channel is for my investing and trading diary, and as usual, this video will be embedded in a blog that talks about the same thing and further explains what I'm talking about and documenting this phase of my trading journey because this period I am concentrating on trading and trading Forex specifically. So now I have, after 3 years of trial and error, found a system that is suitable for me. I have been testing this system for the last 15 days around that time. And I added a layer to my risk management plan, which is including back testing. I will show you the back testing software that I used and how I came to know about it, but not in this video. This video is dedicated to this particular part of my trading journey, and I'm documenting it because anyone who is in this journey might benefit one way or the other, either by disagreeing with me or by agreeing with what I'm saying. So I'm sharing this so that if anybody is in the same boat, in the same phase, maybe someone will benefit from the things that I share. Okay, so this video is about my journey towards becoming a successful trader. And I want to be, what is the definition of a successful trader in my point of view? It is becoming consistently profitable. Now, to be able to do that, that means I need to have a system or a trading plan. I'm going to use a system, a trading system, or a trading plan with the same meaning. So that means that my my trading system or my trading plan needs to be consistently profitable. So I found this system from someone on YouTube actually, but I didn't take what he's saying and just applied it. I kept on trying it as he mentioned, and then I started playing with some of the details until I reached a level where it is now mine. I have put my own rules, regulations into the plan so as to make it mine. In future videos, I will tell you who that person is. That person is, in my point of view, incredible. The way he came up with this system is, I really don't know how he came up with this system because he has delved into great detail. And I really don't know how he came about discovering those details. In any case, I'm not going to talk a lot about that person because not in this video, in the future, maybe in the coming video or other videos, I will be referring to him. And for free, actually, I will, because that person deserves the traffic. And the people who are searching for a trading system deserve to know about this person, at least to have his ideas as an option or the tools that he's using as an option. And by the way, he does not use any indicators. For example, the screen that I'm showing while I'm talking is based on his system. And this is, of course, modified to my system, but it's totally based on what he said. And as you can see, I have no indicators, no special indicators. It's all lines and dots based on the chart itself. And this way, we can use TradingView without even having to use the limit of 2 indicators for the free version. If you want to use TradingView for free, well, this system helps a lot as well. And as you can see now, I have so many tabs. I have all 27 measure and crosses that I am looking at on daily basis, and it takes me about 2 hours to finish all 27 pairs. Okay, so let's start from the beginning now. To start from the beginning, I need, okay, this is the chart that I use to plan my blog, my diary blog. So today we are talking about my journey on how to become a successful Forex trader, which means, as we said, to have a system that can consistently generate profit. Now, to become a successful trader, in my point of view, depends on two pillars. One is the risk management plan, two, the trading plan. Now, I talked a lot about the risk management. I mean, if you can see here, this is the main risk management article that I wrote. And all these articles, I mean, this is the single item on my blog that took so much space and so much time because it is crucial. Without the a proper risk management plan, there is no trading really. And because of the system now that I'm using, I actually changed the system. Now, to be efficient, we are going to go to one of the articles that I wrote in risk management, and it actually um, describes or gets kind of to the point. 3 areas to develop your trading plan. I just, in this article, this article, by the way, does not have a video. I didn't make a video for this topic. So we have 3 crucial areas. The first one is to decide our risk per trade. So what is the risk that I'm willing to take per single trade? 1%, 2%, or somewhere in between? Well, I used to do 1%, and I think I wrote it somewhere here that at the time I used to do 1%. No, I didn't write. Yes. No. The commonly recommended percentage is between 1 and 2%. Today, because of the system, I want to allow for more. I still don't have experience how the system will work, how many positions it will open per week or per day. So I lowered the risk. Now I open only 0.5% each trade, 0.5%. Why is that? Because if the trading system, because I depend on pending orders, I don't do market prices. Some other people do not, experts do not understand how people deal with pending orders, and I totally respect that, and I totally understand where they're coming from, and they might be right in some of the areas that they depend on their point of view on. But for me and for my time and my system and my lifestyle, pending orders are what is suitable for me. If anybody else wants to do it on market orders, that's fine as well. But when I get to leading you and giving you the link to that person who has that system in the future videos, please. Now, if you want to know that person, subscribe to this channel. Not to subscribe to this channel, but at least until the time that I really do the video, that I will link to that person. And then if you don't want the content of this channel, you can just unsubscribe one more time. Okay? But just for the sake of that. So the first question that we want to answer is risk per trade. People talk about between 1 to 2%. Currently, I do 0.5%. The second question is the risk to reward ratio. And each one of those concepts, search the blog. I have written details about how and what is risk to reward and what is risk per trade. Okay, each single one has its own detailed explanation, and some of them with videos as well. Okay, so the risk to reward ratio, I kept it. Mine is at least 1 to 2, which is the commonly recommended. Some go for 1 to 1.5, and I've seen many videos with certain systems that do that. Totally respected. Mine is 1 to 2, and this system actually, the way the system is done, it gives actually 4, 5, 7, sometimes even 1 to 14 risk to reward, which is amazing. So what I do is 1 to 2. By the way, the capital that I'm testing on, and the capital that I intend to start live on, is just $1,000. This is what I intend to do. Okay, and this is to document my own promise to myself. Okay, the third is lot sizing. Now, once we know the RRR and we know the percentage of trade, the risk per trade, that the lot sizing depends mainly on what's the risk per trade and what is the capital that you have today and the stop loss distance. I will show you, and I have shown you. There is one specific article that talks only about lot sizing on the blog, and I think I am sure I have a video as well on it. I will show you the site that I use. Okay, this one. So it's called fxverify.com. So, for example, the CAD CHF. If let's go to something more common, the Euro USD. Okay, so this is the Euro USD, and let's say my stop is 30 pips distance. Okay, so it's telling me, well, 1.5 micros. Most brokers don't have less than a micro, so it's 1 micro. Let's say I have only the distance is 15 pips, so I can do 3 based on an account balance of 921. Okay, because this is because of the trials, my balance became before this system. I started the system with 923, I think 923.5, something like that. Okay, so 3 micros. Or you can actually, on this stop loss, switch to stop loss price, where you can actually put the open price and the stop loss price, and it gives you the same. And see, this is the 0.5% risk that I talked about. Okay, but for me, what I do, get back. Okay, yes, to the pips. How do I get that? Well, let's go to CAD CHF one more time. Okay, NZD. I have an order there. Let's say I have this tool in TradingView, which you can create for creating long positions and short positions. This is a short position. I open the inputs, and if I go down, it tells me how many ticks. These are 300 ticks, meaning it's 30 pips. Okay, so this one is 30 pips. I go to that, and this is the NZD CHF, and I go there. I choose the NZD CHF, and if I want that short position, and now it tells me it's 30 pips, the distance. So my position will be 1 micro for this amount of money on a 0.5% risk per trade. Okay. Now, why again 0.5%? I want to go back to this point. Let's go back to this. Yes. Why the 0.5%? Because I want to give this system the opportunity to open as many trades as it can. Because at one point, one shouldn't risk more than somewhere between 3 to 5% of all open trades. So by this, if we stick to the minimum, which is 3%, that means I am allowed by the system to open 6 trades. But if my risk per trade is only is 1%, that means I can only open 3 at a time. Um, 0.5% gives me 6. And if I allow it to go to the maximum of 5%, and some people talk about it's okay to go at to 6% of all open trades, 6% of the capital of the account balance. Okay. Well, some people put it on the account balance, and some people depend only on the initial investment, the initial capital. They keep it. They keep the percentage there. I do it on the account balance. So if I want to extend it to 6%, as some actually say, that means I have 12 open trades as a space in front of me. Okay, so. But if my risk to reward is 1%, that means I only have a maximum of 6 trades. And if I go even some go for 2% per trade, that means I will have only 1 trade to be open. Okay. And as a total risk per trade 1, and as a total 3. 2, yes, 3. So now these are the 3 questions that design your risk management plan. Okay, there are other areas, of course. Please go to all the details, but these are the 3 important parts of your money management plan. Let's not talk about risk management because it's a wider concept. Money management plan, risk per trade, risk to reward ratio, which is 1 to 2. 1 to 2 means that each winning trade will accommodate 2 losing ones, or will cover 2 losing ones. Okay? So you will win double your loss and the lot size. Those are the 3 magic numbers. Now, let's move to the next part of being on the journey of becoming a successful trader. Now, risk management is one pillar. The other pillar is the trading plan. We must have a trading plan that is consistently profitable. Some people that, of course, the psychology, the mental state of the trader is a third pillar, but I have that within the risk management concept. Okay. And there are articles that I have written about that. And the beautiful thing is that I have found a solution for the psychology of a trader based on how solid the risk management plan, and specifically the money management plan, that I can depend on it. 2, how mechanical and without any guesswork your trading plan is. And this is what I love about this trading plan. So to find how to create a trading plan. Now, the sources of that, I have read books. I went to YouTube. I have seen so many YouTube experts, gurus, whatever you want, those that talk about those magical indicators. I have seen them all, and I tried them. I tried many of them. Not, I didn't try all of them, but I tried many of them. Okay. Subscribed services. I have read about so many subscribed services, but I did not. Until today, I did not subscribe to any paid service to help me, except for I paid for training courses. So I went to on face-to-face, offline training courses. I went to 3. 2 of them are paid and 1 was for free. And they helped me a lot into designing. And it's all about knowledge. Even if you find someone who talks about a consistently profitable system, it needs to be yours. You need to adopt it. That system needs to accommodate you, to accommodate your mind, to accommodate your lifestyle, to accommodate the time that you can spend on a laptop, on the markets, and all that. And you need to redesign it, redesign what you find, redesign everything to suit you so that you will be really relaxed. One, two, try as much as possible to eliminate the guesswork. I'll tell you an example about guesswork. There is something that mostly all traders know about, which are the support and resistance and trading line and the trending lines. Now, this is the classical school, and I love it. It's beautiful. And I used to actually, I don't know if I still have it here. No, I don't. Okay. I deleted all of them. Now, and I tried the lines with this system so as to see if I can combine this system with the lines. Let's go to the 1 hour and let's do this. And let's say I want to include the trending lines with this system to help me decide better on the positions. And this is a trending line. Okay. One thing is that many people differ on how to draw this. Some people say connect the first two lines. Another school says that the line needs to be touched by as many as possible of the current trend, of the current move. Okay? So, one, the guesswork is which one is better? And we need to try it, of course. Now, one school says after the second touch, now, the third touch, you can start trading. But for me, it was like guesswork. I know these trending lines are very important to understand. And so many people profit out of the classical school. They actually can pinpoint a trade with zero drawback. Okay? Uh, but what I'm saying here is that it didn't work for me. So this is what I'm talking about. When we find a system, it needs to talk to us. For me, a trending line and support and resistance and the Fibonacci with them, and I tried the ABC as well, put them all together to find the selling and buying areas so as to find the best positions to where are the best positions to open. I tried them. Some of them really worked, but I wasn't relaxed. I wasn't sure. Now, with this trading system, I actually lose and I'm fine. I know why I lost. In the classical, which I really tried learning, and I have been learning the classical school since 2003, and still I think I do guesswork with it. I am not sure of it. I am sure that I didn't understand it well. There is nothing wrong with the classical school, but maybe it's not for me. Well, now I am sure it's not for me. Maybe later someone will come and explain it better for me. But today, I'm not relaxed with it. Okay. Or let's say that this trend crossed this. So a break of the trend. And it is said when you find a break in the trend, that means this is an indication that it's going up. I tried doing that with a combination of this. So I have a buying, for example, a buying signal from this system and then the trend line, and I go with it. I wasn't relaxed. That's it. It's as simple as that. Why I'm saying all this? I'm saying all this because whatever system, and this is what I do with a system that I find, I follow it to the letter at the beginning so as to train myself on it. And then I start doing doing adjustments to the system so as to make it mine, to make it suitable for my time, for my mind, for my lifestyle, for everything. Okay. So as to make it, for example, this system, Let me give you a brief just to make my point. Uh, let's see the 4 hour. Okay, this system is based on designing or identifying a trading range. Okay, and this is it. This is the no. Let's delete this line here. Okay, so this is. Let me. Okay, I'm not sure where to start. Okay, we have a change of character. This system is based on SMC and market structure, smart money concepts. Okay, so this is the high of the range. This is the low of the trading range. So first we need to identify the trading range. Then we need to identify areas where there is liquidity. Okay, whether it is an inducement. First we start with order flows and then order blocks, and then there is the engineering liquidity as well as the high of the range. It has liquidity above it as well. So the system says identify all the order flows, okay, and then choose the extreme ones, the extreme one to the top and the extreme one to the bottom, okay, and identify the engineering liquidity. The orders can be taken from either the inducement or the decisional order flow or the extreme order flow. If you did not find unmitigated order flows, this is what the system says. And when you get to know the guy and listen to his videos, you will know exactly what I'm talking about. If you don't, if we don't have valid order flows, then we tend to find order blocks. And this we do the same. We identify all of them and then we keep only the extremes, the extreme high, the extreme low, and in this case because it is downtrending, so the decisional is the one closer to the inducement and the extreme is the one on the high. So but I deleted from my system all those that are here, and I don't take orders from the inducement. I only use the inducement to identify the trading range, and I only use the extremes, order flow or order block. And sometimes, if even if there was an order flow, I might take the order block of that to make it more specific in some cases. Okay, or see this one I couldn't take because the stop loss is more than 49 pips, which is more that I can afford. I mean, I have only $900, $921. I cannot do a stop loss more than 49 pips. 49 pips is the maximum that I can do because it will give me 1 micro. There is nothing less than 1 micro. Okay? So I couldn't take, even with an order block, I couldn't take this trade. Okay? So I made it mine. This is it. This is what I am trying to say. So books, YouTube, subscribed services, training courses, all that. Accumulate this knowledge. And from that knowledge, design a trading plan that is yours. Once you do that, now we go back to our plan of risk management. In all my articles, I concentrated and I stressed the fact that we need to do all the testing on a demo account. Now I have another layer and I will do a video on it and I will show you one software that I used. I also got to know that software from this guy that I learned the trading plan from. The one layer is back testing. So now I have back testing and then a demo account. And then once those have met the KPIs that I have set, the KPIs, the key performance indicators, certain factors that I put to myself, rules, things that I need to achieve. If I achieve them, then I will say I am ready to open a live account. But before I do this, I will not open a live account. Now, at the end, I think I started at the end of 22. So 23 is 1 year, 24 is 2 years. Now in 25, going through the third year, even if it took me to the fourth year, I will not lose money because of my ignorance. Okay? Because that money, it took, I mean, all of us, we earn money the hard way. And even if we got it the easy way, we don't want to lose it just out of stupidity or out of rush. Okay. So this is what I want to say in this video. The two pillars are um, risk management, and from there the money management plan with the three questions or the three crucial numbers that we talked about, and the trading plan that it needs to speak to you, and it needs to be consistently profitable. This is what I wanted to say today. There will be a blog about this, and that's it. See you in the next video. Bye bye.